Okay, I'm admitting. Okay.
Welcome, everybody who just came in. We're probably going to start the meeting about 7:05. Allow everyone to get in.
Okay. Lots of eager folks.
So Bill, stop screen sharing or?
Yes,
Okay.
we're still waiting for some people to come in. We got 2 or 3 in the waiting room. But Carl, at any time, if you'd like to start, we can go ahead.
Okay. Welcome, everybody. This is the March meeting of the NWSOFA Fiscal and Economic Issues Group. It's also Happy St. Patrick's Day and Happy Election Day. And I'm glad that we're getting you guys not at the bars. So I'll go out after this meeting. We'll try and make it short so we can all do that. Bill, you know, normally would do a little intro on what the heck is NWSOFA. I don't know if he's planning to do that or not, and if not,
yes, I am.
Okay.
Yeah, and as typical, I'm having a little problem sharing my screen. There we go. And it should be up in just a second here. All right, folks. Welcome to Tuesday night. And in Illinois, we call this Happy Voting Night. It's also our fiscal night. Welcome to NWSOFA, which stands for Northwest Suburbs Organizing for Action. And we are an indivisible chapter that started out in the northwest suburbs of Chicago, the land beyond O'Hare. Tonight, we're going to be having a presentation by our fiscal and economic groups, David Faustus and David Donnie, who are the co-hosts. This presentation is going to be viewed by folks all across the country. We are part of Indivisible, one chapter of 2,700 across the country, growing at 2 to 4 a day. Our whole goal here is to help you understand the facts. That's what these presentations are about. The ability to talk responsibly and sharpen your arguments with your friends, your neighbors, people that you work with, and find the best way to communicate to those audiences of yours. We're organized on the twin snowflake principle. On the left side is our communications team. On the right-hand side are our issue teams. Both have expanded greatly. There are now 19 issue teams, one of which is our fiscal and economics. You can see that on the bottom right-hand side. Every month, every one of these teams has 1, some 2, some 3 issue teams. The secret sauce of our organization is 30 all volunteer leads that do the communications and also do the issue teams. And we have a team of about 10, what we call on the bench leads that are ready to move into the next level. Just a few things to talk, things that we've been doing new. If you were to take your camera out and take a photo of this QR code, it would take you to what is known as a link tree. A link tree is a one page that allows you to set up so that folks can go quickly just by clicking on those yellow bars to any of our various areas, whether it's our website, Facebook, Substack, Blue Sky. our YouTube videos, or just to have more information. Tonight, we are YouTube recording this live, YouTube Live. And if you want to see it, there's a 35-second delay. So if you have to take a phone call or anything, you can drop back in and you can actually pick it up right on our website. Our website is NWSOFA, Northwest Suburbs Organizing for Action.org. And you just click on that, and at the top, you click on a tab that says YouTube Live, and you're taken to our channel. And you'll see an area that has 6 different areas. There's like 400 videos up there. The one you want to click on is the one that says live, and those will show the most current of the videos that are out there. Also, we've just introduced our new threads, what we call our merchandise site. We are doing that through Threadless, and I'm actually wearing one of my new hooded T-shirts. But you got caps, you got shirts, you got T-shirts, etc. And as a introductory offer for everybody, there is 20 to 40% off on every item. So that is really cool. And we are all gearing up for March 28th. That's in 11 days now. That's for No Kings 3. And the one locally here is going to be in Arlington Heights, right at Northwest Highway and Arlington Heights Road at the Arlington Heights Clock Tower. But all across the country in over 3,000 locations, plus across the other countries, the No Kings rallies will come out. So that is really cool. So anyway, during this presentation tonight, you can ask questions that the co-host will answer. Some of them during the questions, some in the chat, others when we have breaks in the program. If you would just help everybody out by starting the question with a huge all caps question so we can find them easily. And at the very end, if we have time, we'll ask you to raise your digital hand. But that would be very, very interesting and cool. So tonight we have the fiscal and economic issues Zoom meeting. Carl, I'm turning it back to you.
Thank you, Bill. Welcome, everyone. As I said, happy St. Patrick's Day, happy Election Day. Hopefully everybody got their ballots in if you're voting in Illinois. Bill kind of covered this. So tonight's agenda, we're going to do an economic overview. We're going to talk about the labor market. We're going to talk about GDP growth, Social Security finances.
Carl, can you kick this up to presentation mode?
Sure. We're going to have to get you a
bigger
better
screen,
glass or something. We'll talk a little bit about trade and tariffs, household finances, other economic measures, and action items. Let's go to economic overview. So things going well, at least as of a month or two ago, because the data is most of the data we have is historic, so it's not current. But from January 25 to February 26, wages are up 4% and prices were up 2.7%. Stocks are up 10%. But year to date this year, they were down 3% as of March 13th last week. Near record real net worth in Q3 2025 for the bottom 50% and for all other groups. And record real median household income in 2024, because the Census Bureau reports that a year late. And we're hoping that carries into 2025. But they report the real median household income, I think, is reported in September of the following year. So things not going as well. Job creation was real slow last year. And it was a combination of lower demand, reduced labor supply due to immigration restrictions, firing federal workers, and retiring baby boomers. We also have, for people who are still looking for work, we have 700,000 more unemployed than in January 2025 when Trump took office. The unemployment rate is now at 4.4, well, last month was at 4.4%, which was up 0.4% from January 2025. The Fed's preferred inflation measure, core PCE inflation, is at 3.1%, January to January. So inflation by the PCE measure is high, although by CPI, it looked low at 2.4% before we got all the current high gas prices. And the tariffs are averaging about $2,000 per household in higher taxes or prices. So it's not a great year, but the economy before the Iranian war looked kind of okay. So again, progress prior to the Iranian war, lower food prices wasn't happening. There was some progress on gas prices. Gas prices basically held steady through the week before Thanksgiving from when Trump took office. And then they started going down. And then a little bit before the Iranian invasion, they started going up again. And as of last Friday, the national average gas price was $3.50. I think when I checked it today, it was more like $3.80. And interestingly, Illinois' gas price was only 1 or 2 cents higher than national average, which is kind of unusual. Lower energy costs was promised by Trump. That hasn't happened. Electricity prices are higher. Auto sales are up a little bit. Manufacturing jobs are down. The stock market has gone up since Trump took office, although it's down this year. Cut the debt with tariffs hasn't been happening, especially since we're now going to have to refund all the tariffs that were collected. And there was a slightly lower trade deficit in 2025. So again, this was as of last Friday. Actually, it was as of last week, last Monday. So it had, we had our low point on January 12th. And now it's up, like I say, this was 350. As of today, AAA was quoting it at 379, I think, 378. Okay, come on now. And tariffs plus this so-called One Big Beautiful Bill Act means that combine those two, the bottom 80% of the country in terms of incomes are losing based upon the Trump administration policies. The 90th percentile is up a little bit, and the top 10% is way ahead because of the big tax cuts for the top 10%. This does not include the increased cost of health insurance for the people who are receiving the enhanced subsidies that expired at the end of 2025 or the beginning of 2026. So the average ACA out-of-pocket premium costs were going up around from 900 to around 1900. So again, that's for people with slightly higher incomes. In here, they got dinged even more. Oops. Let's talk about the labor market, which is one of the things that I think is one of the most important economic indicators. As we said here, now, historically, 100 to 150,000 jobs added monthly indicates a steady as you go economy, holding the unemployment rate even. There's some indications that with the way we've restricted immigration, that the number may not be quite this high, but we'll see. So about 160 million people have payroll jobs, or about 160 million payroll jobs. Okay, the payroll jobs figures are based upon the establishment survey, which surveys a large number of employers, but the response rate on that survey has been going down under the Trump administration, which is why we've had some larger than normal revisions. So we talk about the revisions, the numbers get revised in the prior 2 months with the monthly jobs report, and there's also an annual revision that takes place. So what we see is that we had, back in 2020, we had a very short recession where we lost 22 million jobs versus the peak. And then the economic downturn to get back to the pre-recession peak was over 2 years. So from April of 20 to June of 2022 was over 2 years to recover. And then since then, we've added jobs, although it's been relatively flat for most of the last year. My mouse is sticking, but we'll try and keep going. So anyhow, monthly job growth, we can see that job growth has been declined. And in 2025, we started seeing negative monthly job growth, including on the 3-month average a couple of times. So we're seeing things that are not real good from the job growth standpoint. So far, no one seems ready to call this a recession, and I kind of agree with that. But we'll have to see where we're at between now and the end of the year. And even if we do go into a recession between now and the end of the year, unless something drastic happens, we probably won't rule the recession until sometime next year. So anyhow, job losses in February, which is when we had the 92,000 jobs lost, were in a lot of categories. One of the biggest ones, which is going to recover, is health services, because there were some strikes out on the West Coast and Hawaii, tens of thousands of jobs lost, that are going to bounce right back with the strikes being settled. So I'm hoping, notwithstanding the war, that we actually get some recovery. This is in the note. You'll see the offices of the physicians lost 37,000 jobs due to the strike activity. Typically, healthcare is about the only thing that's been adding the jobs. So we're about 19,000 jobs below where we were before Trump's Liberation Day in April of 2025. Okay, there's another survey, which is the household survey, where they call up 50 to 60,000 households and ask whether people are working. And if they aren't working, are they looking for work, et cetera. And so if somebody to be considered unemployed has to have looked for work actively in the past month, is available for work, but did not work at all during the month. But the unemployment rate tells them what percentage of the labor force is not working. It measures slack in the economy. The historical average is around 5.7% for data going all the way back to 1948. So even the current 4.4% is not high by any means, although it does mean that we have 700,000 more people unemployed than we did when Trump took office. We don't want the unemployment rate to get too low, because if it does, that tends to spur inflation. And we already have some things that look like they're going to spur inflation. So we look at the unemployment rate. We see that when Trump took office, it was at 4.7%. When he left office, it was at 6.4%, which is fairly consistent for a Republican president. Basically, other than Reagan, since World War II, the unemployment rate has gone up under every Republican president during his presidency, and gone down under every Democratic president, although it was really slight under Carter. Basically a break even. Change in the unemployment rate from when Trump took office to last month. African American unemployment went up by 1.5%. Asian went up by 1.1. Overall, and Hispanic both went up by 0.4, and white unemployment went up by 0.2. And why that's true, I don't know, but it is. Or at least that was what reported by people. Also, the change in unemployment rate went up a little bit for old folks, a fair amount for people who were 45 to 54, not a lot for people 35 to 44, and then more for people 25 to 34 and people 16 to 24. So the unemployment rate is affected by age. Now, if we look at what's happened again, since Trump took office, the population has grown, but a lot of that population growth is in senior citizens. So the labor force, the people who are actually either working or looking for work, has actually shrunk just a little. The participation rate overall has shrunk a little. Interestingly, the number of people employed has shrunk a fair amount, which kind of surprised me when I saw that. The employment population ratio has gone down. The number of people unemployed has grown by 700,000. So the unemployment rate has gone up a little bit. And not in the labor force has gone up quite a bit. Again, that's mostly people who are considering themselves, like me, retired, although I didn't retire in that time frame. So a lot of times we look at the employment population ratio for what's called the prime age workers, people who are probably out of school by the time they're turned 25 and are not yet retiring by the time they turn 54. What we see is that prime age group shrunk during the pandemic recession and then went up. And again, fairly consistent when the jobs recovered by June or July of 2022. It's been relatively flat since then. Now, job openings to unemployed are, for a while, just before the pandemic, job openings were slightly higher than the number of unemployed. They went way down with the pandemic. They recovered, and we actually, by again that June, July of 2022, we were up around two job openings for every person unemployed. And right now we're at slightly less than one job opening for every person employed. And of course, as we've talked about previously, the job openings may not be where the people who are unemployed are. Maybe disconnects due to age, training, or geography. If there's a bunch of job openings up in North Dakota and a bunch of unemployed people in Ohio, that doesn't do us much good, especially because with two income households, it's tough for one of those incomes to move to the job opening. So are there any questions about the labor market that did you answer those in the chat, or anybody wants to speak up and raise a question?
I had a question about it's kind of what's going on in the information technology area, and I didn't know the answer offhand. So I took a quick look at what Copilot had to say about it, and I put that in the chat in case you're interested. But at least what it's saying is that there was a lot of hiring in tech during the boom, that time when we had 2 job openings per unemployed. There was a lot of hiring going on. And then the AI piece is starting to bite in technology, where companies are laying off people or applying AI so that they're not hiring the way they used to, and they're letting attrition take down their workforce. So those were 2 of the reasons that Copilot gave.
Okay,
Ori has her hand up.
speak up.
Okay, Ori.
Thank you, thank you. I truly, and I put it in the chat, I truly appreciate your including the racial diversity breakdown of the unemployment rate. But when you said you didn't know, hello, am I still there? Okay.
Yeah,
You
you're
said
here.
you didn't know why that would be. Do you have any idea whether the cancellation or the elimination of DEI structurally had any input on the unemployment rate of people of color?
That's an interesting theory and probably has some effect. Plus the fact that we let Doge cut a bunch of government jobs, which tended to be have a fair number of minorities. So that would be another reason, along with the cutting back of DEI in the private sector.
Also, when the economy slows, historically, African American unemployment has been sort of the canary in the coal mine, and sort of goes up first. So that's I'll look into your question a little more detail, but that's been another historical trend. Is it's sort of as where the economy is slowing down, you're seeing that unemployment rate going up first and fastest.
Okay, any other questions, since I can't see them?
There's a question from Mark in the chat.
Okay,
I don't know, would you like me to read it, or did you guys want to answer it?
if Mark wants to speak up, or you can read it for me.
Yeah, Mark, if you'd like to raise your hand. Or
So Carl, last week we were at Moretti's, and I asked you a question about how states work as opposed to the federal government. Susana Mendoza is the current controller in Illinois, and doing a great job, by the way, but she's not continuing. But anyway, how do states differ in how they're in having a controller? How does the federal government do? How does that operate?
Well, most states are not allowed to run
and
a
that's to
deficit.
both of you. So,
okay, most states are not allowed to run a deficit, where the federal government obviously is. Now, Illinois, when we have less revenue than we have expenses, we borrow. And so we have a huge backlog of bills that haven't been paid. but that's not a deficit per se. So if you go back in about 10 years, you'll see we exploded our backlog of bills under Governor Rauner. And then after Rauner left, we raised tax rates, and the backlog of bills has gone down quite a bit. So it's more normal, just pay bills. They sit for less than a month and then they get paid. Got anything to add to that, David?
Nope.
Okay. All right, let's go on to GDP, gross domestic product. And growth in gross domestic product, which was negative. Okay, so it's a measure of the national output or the size of the economy. Gross domestic income is a measure of national income. Over time, it will equal GDP. The Bureau of Economic Analysis, as part of the Commerce Department, reports GDP quarterly. It will then adjust the figure twice over the next 2 months. So we are now sitting at the second estimate of fourth quarter GDP growth. And it also does adjust it later on too. Media typically covers the real inflation-adjusted GDP growth rate at an annualized rate. The arithmetic of GDP is here. Consumption is about 70% of GDP. And a constant level of government spending doesn't affect GDP growth, but a change does. So we look at what happened to GDP, and GDP shrunk during the pandemic recession and then began growing. And by the time Biden took office, it basically had fully recovered from the GDP standpoint. Remember that jobs didn't recover till a couple of years later, about a year and a half later, middle of 2022. We had a slight downturn of GDP in 2022. We had a slight downturn at the beginning of 2025. So, and GDP right now is a little over $30 trillion on a nominal basis. So we look at those quarterly numbers, which we were looking at before, and we see that there was a negative number back in 2022, which is not quite on this, for one quarter. We had the negative first quarter of this year. And in the fourth quarter, the most recent quarter, was initially reported at 1.4% real GDP growth. It's been revised down to 0.7% real GDP growth. And at the end of March, it will be revised again, up or down, who knows? So from a growth standpoint, looking at the real GDP growth and the lack of jobs growth, one would think that the Fed might want to cut interest rates until we go back and look at that 3.1% core PCE inflation, which says, yikes, that's too high, because their goal is 2%. And then we'll look again in a few slides about what's happened to gas prices, which means that we expect with that and Trump's starting tariffs again, that we will see even higher inflation going forwards. So again, this was from the most recent quarter. And by and large, wasn't a single metric that caused it to go down, but a combination of a whole bunch of different ones. And we look at the annualized rate, we see that real GDP went down in 2020. It had been in a fairly narrow range, but around 2% prior to low twos prior to that. Recovering from the pandemic, it took off. And in 2025, for the, again, fourth quarter of 2024 to fourth quarter of 2025, it was 2.1%. So if we have real GDP growth without jobs, that tends to mean we have increased productivity. Whether that's AI or something else. But it's true that productivity has been going up. So real GDP per employee has gone up. Okay. Questions about GDP? Any in the chat? Anybody want to raise their hand? Anyone just unmute and speak up? Or not?
Satya has a question in the chat. Would you like me to read it?
Sure.
Okay, she says, question. In past, Social Security funding was independent of general fund or whatever it's called. Was that changed from independent to integrated into general fund, perhaps sometime after his lordship Ronnie Boy?
I believe that Social Security has always been sort of combined reporting with the overall finances. What happened through Reagan, and even a little bit after that, Social Security was collecting more in revenue, taxes, than it was spending. And that was true until about 5 or 10 years ago. We started spending more in Social Security than we're collecting in taxes. So that might be the change that we're seeing as to how it's affecting the general fund differently than it was prior to Reagan, even after Reagan.
Yeah, we're going to go through the Social Security finances in detail here in a second.
And I'm going to hand that one off to David.
Okay. All right, let me share my screen.
Sounds like a plan.
Hold on, I've got to put it in presentation mode here.
Yep.
Bear with me a second. Here it is.
So yes, there is still a positive balance in the Social Security Trust Fund, which is being depleted. And currently, the estimate is it will be depleted by about 2034.
Carl, can you see this as a full
I can
size?
see it, yes.
Good, thank you. All right, so there's a lot of text here. I'll show you pictures in a second. This is an area it gets confusing. It's like inside baseball to a certain extent when you're analyzing some of this, but the risk is that if nothing changes, the benefits would get cut in 2034, as Carl mentioned. That's highly unlikely to happen. Most likely faced with that, both parties will come together and find some way of not cutting benefits, or people will go crazy. It will cause a great deal of suffering if that happens. and if the benefits are cut. But so I really do think it's going to get fixed, but I understand why a lot of people are nervous about it. It is funded by dedicated payroll taxes, and every dollar of those payroll taxes that gets collected must go to recipients. And the Social Security Trust Fund is the accounting construct that makes sure that happens. All that payroll tax revenue sort of goes through there and gets recorded as something that is owed to Social Security recipients. And then the government may take it and spend it on other things, and they have, but that trust fund still exists as a legal entity and has a claim on the amount of tax revenue that the government takes out of there. So this Social Security Trust Fund has been there forever. There's about 2.5 trillion in the balance. That doesn't mean it's sitting in a bank account somewhere. The government has spent that money, but it is a legal entity that is due. It is owed that money. It is part of the national debt. The government owes it that money. What's been happening, as Carl mentioned, is recently the amount of spending, as you have fewer workers per retiree, as we have more, an aging country, essentially, the trust fund balance has now started to fall very slowly. And I'll go through some of the math on that with you, and that trust fund balance will be zero in 2034, which means only the current payroll tax revenue is going to be available to the program, assuming nothing has changed. So the program can't add to the real budget deficit. When you think about it, whatever the government chooses to do, it's only the amount of payroll tax that is collected is going to go out for that program, barring some other change. So legally, Social Security never has caused any part of the budget deficit, and nor will it if the law remains as it is. It simply is funded by the payroll taxes that have been collected, and it does not add or detract in the deficit calculation when you step back from it. So here's a picture of kind of how it works. And there's a detailed description over on the right, but if you stick with the diagram for a minute, the trust fund was about, and this is in billions of dollars, so that blue bar on the left is 2.789, that's 2.789 trillion. The payroll tax revenue for the year was about $1.3 trillion. There's a little bit of interest that is accrued. And then the payments that went out, you can see the payments were a little bit more than the revenue because it can draw down the trust fund. That money is available for recipients as long as that trust fund exists. And the year in 2024, it ended at 2.7 trillion, just down just slightly from the year before, but that is going to be accelerating over the next 7 years or so. As we get toward that number, you're going to see that Social Security Trust Fund number getting a lot smaller. The reason behind it is that we have an aging country, and the number of workers that are paying in relative to the number of recipients has been falling. So in the 1970s, it was 5 workers for every retiree, and now it's getting more like 2 workers for every retiree. So it's getting harder for the program. I'm sorry, by 2090, it will be 2. Today, it's more like almost 3. It's about 3-ish. So that's what's the long-term trend that is going to make this difficult to finance the program under the current way that it's financed. Is you just have a lot fewer people paying into it relative to the much larger population of retired people. It's one of the many arguments for robust immigration is to make sure that you keep that ratio, more like 4 or 3, less like 2. But that's the people voted to a large extent to keep immigrants out, and it causes grief for programs like this. People don't understand that, they don't connect the dots, but immigrants pay in an enormous amount into the program. So in GDP terms, Carl mentioned earlier, the GDP is about $30 trillion. So 1% of GDP, if you like numbers that way, about $300 billion. So when I say, here's how much revenue is coming in, it would be 300 billion times 4.7. If you're looking at how big the gap is, it's about 1.7, round number, it's going to be $500 billion in today's dollars is roughly how short the program is on average over the next 75 years. So the revenue is 4.7% of GDP. The outlays are expected to be 6.4 on average. And so you have this 1.7 gap. So how do you address that gap? So favorite liberal solution is to remove the cap on the payroll tax. Right now, people don't pay into the program after they've made $184,500, and that number goes up every year. So you pay into it. If you make 184,500, you will pay into the program all year. If you make 300,000, you will only pay in as much as the person getting 180 that does make 184,500. So if you're making lots more than that, you're just not paying into the program, but you're also not getting more in benefits. The idea of removing the cap is that you start taxing all that income, but you don't pay anybody any more benefits. And what that does is that covers about, I've seen different estimates, and I'll show you a couple of them here in a minute. It used to be the sort of conventional wisdom was it would cover the whole gap, but it's really about 2/3 or a little less, like let's call it 60% of the gap gets covered. It's about 1% of GDP is covered. And the gap here is 1.7. So we got to come up with something else. 1%, adding 1% to the payroll tax rate covers about 0.3. So if you did the removal of the cap and you raise the payroll tax by 0.6, you would cover the shortfall for 75 years. It's a lot easier to cover Social Security than it is to cover Medicare. Social Security is a much smaller program, and it's already, getting funded to a large extent by the payroll tax revenue. And so, as I mentioned earlier, even if you don't change the program, it's still going to pay out 80% or so for, the next 75 years or so. So it's not, it's just, it needs some changes, but they're not giant changes. It's just difficult politically to do until there's a crisis. You're not going to get people raising the payroll tax right now. They're not going to want to do it. And, the removing the cap, the rich are going to scream bloody murder. By the way, just so you know, the people making over 184,500 is about the top 6%. So if you were to remove the cap, you're not hitting anybody but the top 6%, and you're only hitting them on their income over 184,500 because they're already taxed up to 184,500. So it's not raising the rate on all that. It's just they're starting to get taxed on whatever they're making above that. And here's another way of looking at that gap. I would just talk through some of this slide as well. These are that solution of removing the cap, raising the payroll tax are two revenue side solutions. I would fight against any expense side solution. It is very unfair to raise the retirement age on people that stand up to work. It's unfair to raise it on anybody, but it's really unfair on somebody that works with their body because their body is aging. It's a little bit easier on the brain if you're an accountant, but if you're a plumber or a construction worker and people are talking about raising your retirement age, that's just ridiculous. And I would hope that people on this call will always fight that. There are very good revenue solutions that will take care of this, as I've mentioned here. And that's before you even get into thinking about diverting some of the other tax streams in here. Like I always say, we give about $1 trillion a year in tax breaks to the top 20%. You could earmark some of that. If you got rid of some of those breaks, you could earmark that for the Social Security program. So there could be a lot of creative financing ideas that you can put in. It's really not that difficult an economic problem to fix. It's a political problem. Here's a CBO, a CRS, the Congressional Research Service. They're estimating, this was a few years ago, estimated that if you remove the cap, that would cover about 73% of the shortfall. And I've seen other studies that are a little lower. So just keep that number, about 2/3 of it, in mind, and you'll be not far off of the studies that are out there. All right. In the version of the presentation that is attached, that we linked in if you go back to the beginning of the thread, you will see that the link to it. I managed to leave the trade slides lower in the presentation, and in this version I'm going to share with you, I moved them into this section. They are in there. They are just at the bottom of the presentation. For some reason I had put them there and didn't move them. So the trade deficit. Well, let me stop for a second on Social Security. Sorry, I was going to go into this, but let's go back to, let me answer some questions. I see Anthony's got his hand up.
He does. Go ahead, Anthony. You can unmute.
Already know what I'm going to say. Modern monetary theory alert. Everything you said is conventional wisdom and exactly wrong. Taxes do not fund federal spending. Taxes destroy money. All federal spending is performed with newly created dollars. The Social Security Trust Fund is mostly a mirage.
Thank you for your opinion.
Yes, that is an accurate statement of the MMT view. That is, and we are somewhat sympathetic to that. And you're correct in that the government is, they can pay for anything. If the legislation is passed, the government can conjure the money and pay it. The risk is inflation. And we're due for an MMT discussion again at some point, and so we will move that up toward the front of the line. Someone last month had asked for a Social Security kind of finances update, so we are, we wanted to cover that. So you guys have the latest information there, or very close to the latest. I didn't look at I may be 1 year out of date on the Social Security. I didn't check to see if we've got the latest SS administration trustee report. There may be another one that's out, but it's going to be very close to this, and it fluctuates back and forth. The finances will look worse for a little bit, and then they'll come back and look a little better, but the basic storyline doesn't change. This is really where we're at with the program. Any other Social Security questions?
We have a couple questions in the chat.
Okay.
Satya is asking, were Social Security funds ever invested in money growth programs?
Not that I'm aware of. I think it's been the government will just take it and spend it, and they just say we owe it to the program, and there's a certain amount of interest that is also applied. Not a lot. I have to see what the rate of interest is and what that formula is. It's been a while since I looked at that, but you can see from this, there's just not that much interest, but there is an amount of interest that is given to the trust fund.
Okay, and Bruce has a question also. Bruce, if you'd like to raise your hand, you can pose your question. And there he is. You can unmute, Bruce.
Yeah, it's a long one.
I see it.
Yeah, I saw data recently that the trust fund for Social Security would run out in 2031 because of the big, bad, beautiful bill. I then went and looked, and where I found this was Heather Cox Richardson's Substack article of February 26th of this year. And she said that in March 2025, the nonpartisan Congressional Budget Office, CBO, and it's estimated it updated its projections. Okay, it said it expects the Social Security Trust Fund to run dry a year earlier than previously expected by the end of 2031. So I'm wondering where you got your data from, basically, because I'm only relying on what she said in her article.
Yeah, no, these are good sources. I mean, I revere Heather Cox Richardson. And I'm cheating because she actually quoted me one time, which made my year. My friends were shocked when they were all calling me saying, Heather Cox Richardson quoted you. I'm like, you got to be kidding. So I think Bruce, you caught me because my stuff is about a year out of date, probably. And so the more recent information, but I see that number fluctuate. Like it'll go to 2031, like you said, and then it'll go to 2032, 2033. I mean, we'll see how the big, beautiful bill affects it, and CBO is the right source. So your information is correct. It's just the sources here are indicated where I got them at the bottom of the page. So you got the Social Security Trust Fund annual report here. You've got a CRS study. We use definitive sources here. It just looks like they're a year old.
Well, if it's 2031, Congress better get its act together quickly about raising the cap.
Yep. No, that's the best solution. It really is kind of a no-brainer. It would have been even better during the Biden era when we had some inflation. It would have been an immediate removal of that demand from the economy. I mean, think of Social Security as a forced saving program. It takes that money and forces you to sort of government taxes it away, and you can't spend it. So yeah, you're right. They got to get on the case, but like I said, I don't think you're going to see the benefits actually get cut. It's just going to be most likely a last minute save.
Yeah, that's what I think she said as well.
Yeah.
But 70% is still going to hurt a lot of people who rely on that only.
Oh, yeah, they're not going to cut it. Yeah, that would be devastating to millions and millions of families. There's no way any group that's in power that allowed that to happen would be removed. They would be removed in the next election. So they're not going to do it. You'll be all right. But it'll be close. Just to make it interesting, they're going to go to the last minute. They're going to procrastinate as long as they can.
Yeah.
But thank you for that. You're right, Bruce. That sounds like the definitive latest info.
Well, I'm reading stuff quoting a February 2026 CBO report, which says it'll run out in 2032.
Okay. So yeah, it moves around a little bit.
Fluctuates.
You know, I mean, that's what I'm saying. The story stays the same, just the year moves a little. This is what it is.
Okay.
You know, we
Thank you,
first
Carl.
started these meetings back in 2012, 2013, and we said that Social Security was going to run out in the early 2030s. That was a really long way off.
Yeah. Oh, these actuaries are incredibly accurate. I mean, it's amazing with a program like this. You know, they're incredibly precise because it's mostly demographics, and the demographics don't shift enormously.
Right.
All right, so we'll do a quick one through the trade deficit stuff, and then we'll take a break. We'll take a break and just hear. This won't take very long to get through. It's only 3 slides on this.
David, we still have Anthony's hand
Oh,
up.
Anthony, MMT man. We're going to call him MMT guy. All right, go ahead.
Go ahead, Anthony.
I believe that by law, the Social Security Trust Fund must be invested only in Treasury securities.
Correct.
So
Correct.
yes,
Yep.
There's a pile of bonds somewhere that is earmarked for that.
They are not
really can't
marketable.
be invested.
They are phony. They're just paper money. I would not put much, in them. You can't sell them. They're not the marketable kind of Treasury securities.
Yeah.
They're unique to the program. So,
But that was back to the question of whether they're ever invested in money-making opportunities.
No, they're not. They're not. There's no real. You can't just go get the cash out of an account.
The last proposal to put the Social Security money in private equities was Paul Ryan back in the 2000s.
No.
Which is the most socialistic nonsense you could ever come across.
We talked, I think 1 or 2 months, I think it was 2 months ago, about the idea of giving everybody, all the newborns, an account. I think Trump set up for like 1,000 something. And if you make it 5,000, it's like 18 billion a year. It's not that much money. There's like 3 million kids born a year. You give them each $5,000. It's 18 billion. It's not a lot of money. But by the time they retire at 65, if you don't let them touch it, at historical rates of return after inflation, you're still talking about, a couple $100,000 for them, which is a nice chunk of change. And I would be all for that idea. I would not mess with Social Security.
Of course,
Social
in the
Security
mid-2000s, you'll remember what happened was the market crashed and a lot of investments went south.
Yeah.
And so if people had moved their Social Security money funds into private equity, they would have lost money versus
you don't want people, and what you would do also is, as those people age, that money would be shifted from the stock market into bonds, and automatically the people would not have a lot of say over that money. It would be done by the government. They would not be able to play with it, and by the time you retire, you have almost all bonds. And so I think it would work very well, but you don't mess with Social Security. All right, quickly, I guess it's 8 o'clock, so let's take a short break then.
Okay.
And when we return, we will zip through the remainder of this. We're making really good time. Thanks again, always, for the questions. They're always good. And let's come back at what, Carl? What do you think? 8:07, 8:10?
8:10.
8:10. We'll see you then.
We'll try and keep this going so people can go to the bars and celebrate the end of St. Patty's Day. Or track the elections if there's anything going on.
Right. So I drove I drove down the highway from my house to the YMCA Palatine on Dundee, and there's 1, 2, 3, 4, 5, 6 gas stations. The highest price was $4.29. The lowest price, one of those car washer deals, was $3.49. When I came back, everybody except for the one that was at $3.29 had moved up at least 20 cents. Wow. As Boot Money would say, that's a bunch.
Yeah.
So I think this is real. And I know that there's going to be some conversations on this particular issue as we go forward. I want to thank David for that deep dive into Social Security. He had that ready. I was expecting him to say, we'll do that next month. But he was ready, and I don't know. That made me feel good. I believe you all are able to unmute yourself. So I'm just wondering if anybody had a sense of that. I know there were several comments.
So please raise your hand if you do.
Or they can just unmute themselves. I think we set this up that they can unmute themselves.
Yeah.
Yeah,
As
more
long
than
as they don't go
likely.
too crazy, they can just speak up.
Yeah.
Yeah. So
Well,
Carl,
349 around here would be been paying in Alabama. So that would be a considerable increase. I haven't been out.
yeah, on our coffee and conversation, and I think Marilyn might be here today. I think I saw her come in.
I believe she is.
She was talking about prices that were over $4. And I used to be in logistics where I had a lot of guys driving around 24-foot trucks that took diesel. And I can tell you, the diesel now at over $5.
Yeah.
Well, in Chicago now it's over $4 where I am. It went from it went from $3.39 to $3.99, and now it's $4.09. And a block or so north, in fact, Carl, you know that. I've Carl is on because it's closer to him. It's like $4.29. So
yeah,
Get a
it's
gas buddy and try and find something reasonably close that's you know, not too high, one of the lower prices, but I'm not yet a member of Costco or any of those things, which typically have a little bit lower.
well, what I don't understand is why, and Carl and I are not that far away, why one, closer to you is $4.29 and one, what's a 20-cent difference in less than a block, a few blocks? I don't, and these are BP and Shell. We're not talking small. I just don't understand. That's what I don't understand, how in the same neighborhood you can have a 20
yeah. I don't.
percent per gallon charge. It's just all odd to me.
Yeah, Ori, I don't have an answer for you today, but 100 years ago, I used to work at a gas station, and every time the big trucks came in and filled up, the owner would sit down and calculate what the new price was going to be based on what he just paid for that delivery.
Yep.
So that may be what is going on. I kind of noticed that at Costco. Every once in a while, when I'm coming into Costco and I see the big gas trucks there, I head right to fill up my tank to top it off because I know whatever they're going to adjust their prices, and usually it goes up.
I regret not buying gas when I was out there for the pizza party last week.
I was going to say that.
Oh,
That's
you
what
usually
normally
do, Carl. You usually do that.
I had a fairly full tank, and I was
Well, yeah.
hoping that it was going to go down from the 355 that they were quoting then. And of course, it hasn't.
Well, you know, not by us, it's not gonna go down. I always look at the opposite. They say it's going down, it's gonna go up around.
I filled up today at 399 in Oak Brook.
Well, it may depend on contracts now more than it used to be. Because, and those prices are set by futures prices.
Yeah.
Richard
Yeah,
had,
I-
Richard had his hand up, so I'm wondering, go ahead,
Yeah,
Richard.
I'm sorry. I didn't tell you I didn't make it to coffee and conversation this morning.
That's quite all right. There's always tomorrow.
You guys could
Thank you.
discuss election results.
Yeah. I think we have both David and Carl back. Are you guys ready?
We are. We said 8:10, but we can start going if you guys want to go a little early.
Yeah.
A special St. Patrick's Day short break. Okay.
And just to let you know, Lee just put in the chat that Columbus, Mississippi diesel is $4.70.
Wow.
And that's getting crazy. All right, so let's start with trade here. What happened was, Trump, one of his main goals was to get the trade deficit down. He's really big on that. He thinks the trade deficit is just an evil thing where foreign countries are stealing from us, and we're giving them dollars and they're giving us tangible goods and services, and we can print an infinite amount of the money, but they can't make an infinite amount of the stuff. I mean, there's a trade going on, and we're happy. Our people are happy to do it. So you can question that strategy, but what happened with the trade deficit was it ended up being about the same in 2024 and 2025, about $900 billion. But the timing was very unusual because of all the front running of tariffs in the first quarter. So what you see here in this chart, the front running of tariffs, the trade deficit was nearly twice what it normally is, and the numbers are over here on the right, was about twice the size that it normally is in the first 3 quarters of the year. And then it got back to pretty much where it was the year before for the middle of the year. And now those inventories are starting to deplete a little bit, and the trade deficit is actually starting to fall. And so what Trump was doing is he was touting this lower number, saying the trade deficit is down tremendously. And he was being very vague on purpose because he was ignoring all the front running that happened. So we ended the year literally like $2 billion, $3 billion different than the prior year, just not barely any statistical difference from the prior year. And we'll see what happens as we continue forward. So if tariffs were designed to, get rid of the trade deficit, they didn't have much luck, in 2025. And we'll see what happens as time goes on. Now, if there was any question about whether, who was paying the tariffs, because Trump has been consistently lying, saying that foreigners are paying the tariffs. Over 1,800 companies are suing the government for $130 billion. Mostly U.S. companies, nearly all U.S. companies. And so, it's pretty clear who was injured or who paid the money was these U.S. corporations. I mean, they are the importers. They are the ones that are paying the taxes to the government, and then they will get the refund. Sadly, it's unlikely that all of us who are paying higher prices will get a refund, but the corporations will get their money back. Are they likely to give us, are they likely to lower prices? Don't hold your breath. So I don't. Now, with SCOTUS saying the tariffs are illegal, there was some hope there that, that this would relieve the tariff burden, and to some extent it will. And it's tricky to see what the timing is. People are trying to figure this out now. But what Trump is trying to do is replace those tariffs that are judged illegal. He's trying to find another method. And at least my understanding right now, the CRFB is a think tank, and this is one of their studies. It looks like somewhere around half of the tariff revenue that Trump had planned to get under his old plan, he'll still probably be able to get. about half, not all of it, but probably half from other approaches. And they will also be sued. There'll be lawsuits after them. To some extent, this is a little bit like the student loan forgiveness, where SCOTUS said, no, you can't do it with one big hit. And then Biden looked to other authorities where he could find it. And then those also came under lawsuits. And I think some of them, Biden's forgiveness prevailed, and in some cases it didn't. But this litigation will be ongoing for a while. The idea of the refunds will be going on for a while. And it'll be interesting to see how much money the government is actually collecting. You know, every month the Congressional Budget Office does a report on how much revenue and what the deficit situation is, both in the month and year to date for the fiscal year. And we'll be able to see exactly how much revenue, how much tariff revenue is being collected. I think Treasury does reporting on that too, but CBO does a nice job of packaging it up and explaining it. And so we'll be able to see it. It's just, this is kind of what at least one think tank is thinking. It's somewhere around half of the tariffs. So it's still a giant chunk that Trump won't be able to hit us with, but it'll still be large compared to where we were. So any questions on tariffs before we go into the next? Into the household finances, the inflation and wages and stuff?
I do not see any in the chat.
All right. They're starting to drink. The drink is hitting them. The green beer is starting to take its toll. All right. So inflation, the price level went up by 0.3% relative to the prior month. That's what these bars are. So this is versus the prior month. If you were to multiply that by 12, that would be a 3.6% inflation rate, which is high. And so it wasn't a great month in terms of prices. The prices did go up. Remember, February is before the big impact of the Iran and the Iran attacks and the oil and gas prices going up. We'll cover that in a minute. There was this big disconnect because of the shutdown, the distraction, and they weren't able to collect the data for October, and it's distorted things. Economists are saying we'll probably get this straightened out by April of next year. So the view is that the CPI inflation is understated right now. It's higher than this. There's a lot of complexity in there that I don't fully understand, but a lot of it has to do with how rents were handled. And so you can see this big jump, this disconnect down, this drop down here, and we'll see over time how that goes. The good news is wages have outgrown inflation. They've been doing that consistently since before. If you go from before the pandemic, they've always outgrown the inflation. So as much as people were upset about inflation, wages did keep up and in fact outgrew it. And by February of 2026, the wages are up 33% versus about 26% for inflation, pardon me, cumulatively over that time. The inflation that the Fed tracks, the PCE core inflation, is the number they use. When you hear the Fed has a 2% target, this is the inflation that they use. I think this one is a little more accurate than the CPI. On the left side, you can see what that's been doing since Biden started back in January 2021 until latest. And then the right side chart is sort of a zoom on that right-hand part of that chart. But you can see if you look at the left chart that we've been sort of bouncing around 3% for a couple of years. But if you zoom in, you can see that since the tariffs were announced, the core inflation has been rising. And that's not something the Fed wants to see. When they have to deal with a rising unemployment rate, flat job creation, other things equal, they'd want to lower interest rates. But when they see inflation climbing like this, they say, we don't want to do that because we don't want to encourage more inflation. And again, this is January. This is before the Iran attacks and the gas prices, which are going to boost this somewhat. Since Trump started, these are some key measures. So this is January 2025 until February of 26. These are monthly averages. So the average or the reported stats for January and the same for February. So this isn't like the stocks are going to look a little funny because those are often quoted daily, but the stock markets, at least through February, was up very, very well over that time. But then you can see some of these prices, electricity up 5.6, rent and groceries up. So if Trump says prices are down since he started, that's not true. What is true is that wages have outgrown inflation, about 4% for wages versus 2.7 for inflation. So on average, purchasing power has increased under Trump as it did in the last couple of years under Biden. And then gasoline, obviously, it's not minus 5.5 anymore. It's going to be more like plus 15, plus 20 the next time we see this. We'll see about March, but if things continue into April, March and will be definitely up, and then April will be way higher, probably depending on hostilities. So the oil prices right now, or I should say right now, as of March 9th, we're about $95 a barrel. This is the West Texas Intermediate, WTI. You'll also sometimes see the Brent crude price, so don't get hung up on it. They're usually pretty close. But the oil tends to spike when you have wars. Shocking, when Russia invaded Ukraine, oil prices jumped a lot. And when Trump and Israel started attacking Iran, the prices jumped up. And historically, in context, 94.65 a barrel is about 91st percentile, meaning 91% of the time the oil price is lower than that. So it's high. This is a high historical oil price. And it looks like I just threw a note in there that it was 98.71 on March 13th. I didn't look at today's price, but it's probably in that general area, somewhere in the 95 to 98 range. One thing that's interesting about oil and gas prices, they are very strongly mathematically related. Basically, the gas price per gallon is about 3% of the oil price plus 80 cents. So when a barrel is $100, 3% of 100 is $3 plus 80 cents. Gas is going to be around 3.80 nationally. It's a pretty reliable historical formula. And it has if you're a statistician type, an R squared that high means it's really predictive. Oil really predicts where the gas price is going to be. And there's some prices over here. If oil gets to 150, that's $5.30 for a gallon of gas. If it gets to 200, that's $6.80, gallon of gas. So let's hope it doesn't get to 7. But that is, people with electric cars are going to be thrilled when they get there, if they are avoiding that kind of a hit from the oil and gas prices. So just a little kind of what's going on with that. I mean, the Strait of Hormuz is a very narrow channel. It's right borders Iran all the way through here. Iran's been hitting some of the ships in the Gulf, and it's scaring people, so they don't want their ships going through there. It's going to significantly cut the traffic. They can mine it. They can, even if their military is severely degraded, it's very easy for them to sneak some mines out there on small boats, or there are various ways that they can cause all kinds of havoc in there. And so this is why the oil prices have gone up, and they may go up more than that. One thing Paul Krugman pointed out is that the U.S., even though we are now one of the world's largest oil producer, which you wouldn't have had that in your bingo card 20 years ago, but the shale oil boom has sort of changed that. The U.S. still doesn't refine all the oil that we use locally. We export certain kinds of oil, we import other kinds, and so we are still subject to the global oil price. We do not have an independent U.S. market that is entirely separate so that we are insulated from this. Could we do that theoretically? Yes, but that's not going to happen overnight. Krugman's estimating, he says, my back of the envelope calculation says that a barrel rise in oil prices adds about 0.3% to inflation, working through the higher gas prices. And keep in mind, it's not just gas prices. When the gas price goes up, that's all sorts of transportation. Almost every product gets transported at some point, and unless if it's by truck or anything else, it's going to cost. And so it's not just consumers paying more for gas, it's the cost of all the inventory that's getting shipped to all the retail stores is adding to inflation. A $50 a barrel rise would increase prices about 1%. And so those are just his a back of the envelope calculation from Krugman to me is as close to economic gospel as you're going to get, but we'll take it. But it's going to be that's kind of what he's saying is a reasonable estimate. And you can see that the traffic through the strait, at least through the early part of this month, had nearly stopped. Here's another look at the gas prices. We looked at this a little bit earlier, but the Copilot, I was asking Copilot kind of how much did the Russia invasion add to oil, to gas prices? It added about $1 in 2022, about 50 cents in 2023, and a quarter in 2024. So there's Putin helping his buddy Trump get elected again by driving up our oil prices and causing all kinds of havoc. In our media, they blame Biden instead of Putin. And our marketing team wasn't strong enough to solve that problem. We had some questions last time about home equity and kind of the net worth piece, and so this is net worth of households per household. So about 40,000 on average back in the 90s, and pretty stable between 40 and 50. Then there was the housing bust, and a lot of people in the bottom 50% had bought their first house. They bought it with little down. And when the housing prices got wiped out or there were foreclosures, they lost all that net worth. So the net worth of a typical household in the bottom 50% of the US was near zero in the early Obama era because of that housing bubble bursting and the Great Recession and the financial crisis that we had. So that has since been reversed. Housing prices have come zooming back up. And now we hit the record under Biden here, and it was either the fourth quarter of 21 or the first quarter of 2022, and we're nearly back there now. Household net worth is at a very close to the all-time record. This is real, so this is adjusted for inflation. These are comparable. The price level in the economy has been addressed here to give a comparable figure. Everything's in Q3 2025 dollars. I always show you guys this slide. It's one of my favorites. Every time people panic about the national debt, I say, no, the household net worth is about 173 trillion relative to 38 trillion for the national debt. We're not going bankrupt anytime soon. And the top 10% have 118 trillion net worth. So there's a lot of room to tax them more in a variety of ways to do that. And whether it's a wealth tax or just stronger, stiffer income and payroll taxes, there are elimination of tax expenditures, estate taxes. There's a million ways you can tax the rich if you have the political will to do it. I'm not going to read through this to your, I'm sure, great joy, but this tells you kind of what the real net worth is by income group. The Fed reports this by both wealth group and income group. So this chart was the wealth group, the bottom 50% wealth group. This is by income group, how much money they're making, and it shows a comparison of the fourth quarter of 2019, so before the pandemic, with the third quarter of 2025. You can see the dollar amounts here in trillions, again, adjusted for inflation, so Q4 19 is comparable. You can see the changes. All the groups got richer, got a lot richer. And then in terms of the share, the amount of that wealth that they have relative to the total, the top 1% actually have less share than they have right before the pandemic. And the sort of middle class groups, I call them working class, let's say that, well, it's working in middle, 20th to 60th groups had their share go up, but the share is still small compared to what the rich people have. The top 1% has about 25% of the net worth, and then that 80th to 99th group, that top 20 more or less, has about 48%, 47%. And then as you get down here, the bottom 60%, even if you add all that up, you're not talking about a big share. Here's a grouping of it. The top 20% have 72%, bottom 40% have 7%. So tremendous, wealth inequality in the United States, way more than income inequality, way more. We had questions last time on business applications. What's going on with new business applications? And so they are high. There's a couple of ways that these are measured. There's a And here's the definition. A filing enters the series when someone submits an SS4 indicating they intend to start a business. So there's a form filed with the government. This one is shows the businesses, that shows them all. There are the more likely to become real businesses version of this, which is a little less rosy. See how this one kind of is sort of at an all-time record. This one's sort of come down. This is what they call the high propensity applications. These are applications that are more likely to turn into businesses with a payroll. And the definitions are here on both pages that you guys can read, but this one seems to be the more reasonable one. When they were desperate, like right here at the recession, they form new businesses. People that get laid off start their own companies. And then, this has been fading down, but it's still elevated. They're still pretty robust people, saying they're applying for business licenses. People worried, they had questions about the Treasury sell-off scenario, that what happens if Europe sells, if they use that as a bargaining tool and start to sell off our debt. It could raise interest rates. It could eventually cause the Fed, if you couldn't find enough US buyers of those bonds, you would have the Fed eventually buying. Japan has been doing that for a long time. They have not had a crisis. Their debt to GDP ratio is way, way higher than ours. But essentially the way the mechanism works is if investors sell or don't buy our bonds, the supply of the bonds increases. That's sitting out there. They're selling them, so they're on the market. That causes the bond prices to fall, and that the interest rates move in opposite directions. So interest rates go up. So if this is happening, interest rates are going to rise to try to get other people interested in buying those bonds. And other investors of the Fed will buy at that higher yield. And in some cases, if they buy enough, it'll drive those yields right back down. Or in other cases, they just stay high and they just keep it from getting worse. If some investors are selling, someone else must be buying. You can't just sell. Somebody's got to buy it. And so what that means is that as long as that is happening, there are investors out there that are willing to buy those US bonds. And if it was truly nobody in the rest of the world wanted them, then it would be US people saying, okay, if that bond price has fallen enough and I can get an 8% return on a US corporation or a 10% return, I'll take it. I don't see this as a realistic scenario of something happening. Not where things are right now. I mean, if we invaded Europe or if we decided that we were part of an axis with Russia and we landed our troops in Europe, I mean, yeah, you could see Europe selling all of our bonds, but you're not gonna. It's highly unlikely. It's more of a fantasy scenario. I wouldn't lose sleep over it. The foreign ownership of treasury bonds has been falling for many years, since the Great Recession. It had peaked and it's been coming down, still high, going back to the 1980s, but it's come down from this 56% down to this 32% where it is now. The Fed, one way you can look at this to see if it's starting to happen would be the Fed. You would see this blue start to go, rising. Right now, it's actually come down from that recent peak. We had this jump for the pandemic, and then it's been falling. And then just recently, it started to tail back up again. I've got to read up on all the reasons behind that. But it doesn't seem like it's something they intend to do in large amounts. Like we're not going to see this kind of a spike like we saw here for the pandemic. So the Fed has about $4.3 trillion worth of treasuries. They use that to stabilize the interest rate where they want it. It's not, 10 trillion or 20 trillion or whatever that it would grow to if they had to start buying all of these bonds that are out there that people are trying to sell. So we'll keep an eye on it. I mean, we check this from time to time. You can see what's going on with the Fed balance sheet. And if they were to ever start really buying those bonds, you would see this. You would see a lot of headlines on it, but you'd also see the Fed, their balance sheet would start growing. Last but not least, just a couple more things. The home ownership, we had some questions on that. You hear a lot of noise about, there's an affordability crisis for homes and nobody can afford a house and yada, yada. Historically, home ownership was in the low 60s, and then when you got into about the 66 range, and then with the housing bubble, it got to 69. This is a pretty narrow range on this chart. And what this means is this is the percent of households that own the home they live in. So it's not every American. There's 340 million Americans. It's not 65% of Americans own a house. It's 65% or 66% of the households own the home they live in. And this is a pretty stable number. Like 66 is about where it's probably a sustainable number. I think this is probably a data problem. I wouldn't put too much on that. But so historically, we're in probably a pretty stable, even maybe you could argue a little bit high if you look back at the long-term history. More recently, this compares before the pandemic to the most recent data. Overall, actually a little bit higher home ownership than before the pandemic. So in the greatest economy ever, 2019, which a lot of people still think it's the greatest economy ever, we got higher household ownership than we had back then. And the under 35 group is actually, which people always say the young people are the suffering ones, they actually jumped up a little bit under Biden. This is sort of the Biden peak, is this Q3 2022. It's sort of Biden's best quarter. And then it came down. And you'll see this little quick graph here. A lot of these look like little hats. They went up and then came down. But it's still higher than it was in 2019. This one's higher, 35 to 44 than 2019. This one's a hair lower, higher, or same. So all the groups are either the same or better than 2019, except for the 45 to 54-year-olds. The middle age group is the one that is down a little bit. So just understand that when people say there's a home ownership or a home affordability crisis, but they weren't saying it in the fourth quarter of 2019, we actually have higher home ownership rates now. The homes have gotten way, way bigger, although that trend stopped about 20 years ago. It's been sort of fluctuating sideways. This data is kind of tricky to get at, and I had forgotten to include it in the version that is in that you guys have. I just added these when I noticed it this evening. But really, houses are twice the size, and they also have a lot more amenities. They're a lot more fuel efficient. Generally, they have air conditioning, which you didn't have a long time ago. There's more bedroom. There's more everything in these houses, and so it's just a much different world than we had in 1970. That houses people live in much, much bigger places. And I just saw something the other day that said that the number of people living in houses tends to be smaller. Like even though the houses are much bigger, there's actually fewer people that tend to live in them on average. So I got to learn more about that. But just understand that you're getting a lot more house. When people say that houses are much more expensive, blah blah blah, it's like, yeah, are they more expensive per square foot? I have to look at that. But the housing sizes have roughly doubled. All right, that ends our prepared remarks. So we got through this one very quickly, so we can open it up for questions. I figure we'll see how long the questions go, but
Okay.
thank you for joining, and I will stop. I'll keep sharing in case we're jumping around to slides, but then I will stop as we go. So, what questions do we have?
We have a question from Nora. Why do so many people think their wages aren't keeping up with or will never outstrip the cost of necessities such as food, energy, and housing?
Yeah, I mean, we've had this discussion a couple of times. We've gotten into the affordability thing, and I usually take a beating from the audience on my views on this. But the thing I will draw your attention to is the Congressional Budget Office said that we had more purchasing power in 2023 than 2019 across the income spectrum. The poorest people to the richest people had more purchasing power in 2023, and that's after the giant inflation spike, which is 21 and 2022. So, and they released that study in 2024. If you got the last couple of presentations, it's in there. I'm sure I will be sharing it again because I go to it all the time. They're a definitive source, and they said every part of the income spectrum was better off. That doesn't mean everybody's better off. That doesn't mean that everybody's happy. It doesn't mean that there are parts of the country that had, areas that had maybe giant rent spikes and that people are worse off. Not saying that. I'm just saying that for the United States overall, all the income groups, all the kind of aggregate measures, not just high level averages, but even looking at individual groups, the bottom 20% all the way up, people were better off. So I think a lot of it is perception and a lot of it is the media that is always looking for a story. And as you were going into the election, we had all these crises, housing crisis, affordability crisis. There were, I even forget them. There were like 4 of them that they were talking about. Oh, the immigration crisis. There was everything was a crisis under Biden going into the election, and he was never able to really refute that effectively. Nobody else really stepped up as a spokesperson that could really do it. One of the things that Trump does, he has his vice president doing a lot of social media and interviews, talk shows, and a little bit less lately. But for a while, he was very much an active spokesperson, at least a communicator. And we have Buttigieg, I think, is one of our best communicators. I'd love to see him run a Democratic marketing team that really gets the word out. I don't think we do a very good job of it. When if you look at Twitter or other sites that have Democratic stuff on it, they rarely share really useful things to help people get over some of that media bias that's out there. Was the media really worked hard to get Trump back, I think. And, everything was just a crisis. And I think that's part of it. But yeah, there are some people suffering. There are definitely the media really enforcing that. Republican, of course, were happy to support that narrative, try to get Trump back. And now he's trying to battle it the other way and he's struggling with it. It just people put an enormous amount of weight on inflation and they don't think that the wages keep up, but they actually have.
On average.
Yeah, except for those
Well,
on
not just on
fixed
average,
incomes.
in all the groups. So it's on average in all the groups they have kept up. Yeah.
Yeah,
Yeah.
but when you're looking at fixed incomes that you don't get that increase, then there's that portion of the.
True. Yeah, there are people suffering, no doubt. There are.
I know. I know. All right.
Yep.
Anyway,
All right.
we have a question from Miriam.
Yep.
And she says, is the price rise due to fear of shortage or actual shortage, and where? U.S. oil production hasn't been affected.
Yeah. I have never heard of anybody worried about a shortage. And we'll see if there is such a thing. But right now, it's just the demand and supply are very closely in balance. And if you shift it even a little, you could have it. Now, is it possible it could happen? I mean, I'm sure, but nobody is talking about it. I have not seen any prominent economist. Doesn't mean someone isn't, but I mean, I haven't seen it. I follow a lot of these guys. It's not in the major media that there's any real shortages.
So the price of gas is not following supply and demand.
It is.
It's fear.
Well, okay, there's some truth to that. I think you're right, but it is following supply and demand to a certain extent. I mean, there is disruption coming out of the Gulf. I mean, there is somewhat of a less supply than there would be otherwise. But yes, fear is definitely part of it, an important part of it.
Well, if you look at worldwide, there's certain places that are shortages. There's a lot of Asian countries that are not getting their Gulf oil now. They're having to cut back, telling people to, stay home, work from home, all kinds of stuff like that happening. Cuba right now, of course, not getting its oil from Venezuela, is basically blacked out. So there
are places.
A lot of it, and remember, oil prices are a worldwide market. So if there's a shortage worldwide, then that will cause the price to go up worldwide.
Yeah. We're not seeing gas lines in the United States. Nobody seems to be thinking that's going to be an issue. But to Carl's point, there may be places in the world that may run into that, but haven't heard it for us.
They would show up in India, and we're not seeing it.
Yeah.
We had gas lines because we tried to control the price of gas at the pump. and
Okay.
set the price of gas artificially lower than the market clearing rate.
Mark has a question in here. Mark, would you like to raise your hand?
Or just speak up.
Yeah, just speak up.
That's so long ago, I can't remember what it was, but
I can read it to you.
go ahead. Yeah. And I've got a story to tell you.
All right.
But
Your question was, why is the U.S. oil double price affected, or bubble price? You got BBL,
barrel price.
barrel price, affected by the Iran war.
And that's what Carl mentioned, is it's a global market. The US is not insulated.
Yeah.
No matter how much we produce, it just goes into sort of that global pool, so to speak. And that's it. So if the global price is going up, we get hit with it. That doesn't mean we couldn't make ourselves independent if we were to invest and force that. We could, but most likely, I think. But it would take years to do that. And this will hopefully be behind us by that time. We shall see.
So if you will permit me to share my story,
Yeah.
I was working as an EPA contractor on Hurricane Ike down in Texas. And one of the guys I worked with was a Coast Guard auxiliary guy who had Citgo gas stations in Pensacola. And so he told stories about how he went, people said, we can't buy Citgo because that's Venezuelan oil. So he went down there with his gas truck to the refineries, and he just pumped the gas. All the gas was lumped together. You can't separate Venezuelan oil from any other oil. It's all lumped together. There are a few additives that they put into the gas tanks. The various companies add some proprietary additives, but it's all lumped together. So you can't separate it out. It was a great lesson. I enjoyed working with him, although he was a conservative Christian, which I am not. But anyway, I share my story, and I hope you enjoy it. So thanks, guys.
Yeah. I mean, I remember as a kid, I had grandparents that lived on St. Croix in the Virgin Islands, and there's a giant oil refinery there. The Hess oil refinery could do 700,000 barrels a day at its peak. They closed it, I think, a couple decades ago. They tried to reopen it, and they had all kinds of problems, and now it's shut down. But it used to process a lot of the Venezuelan oil. And so if the US were to get serious about trying to refine our own stuff and make our own stuff, or at least stuff from this hemisphere, not Middle East oil, I mean, it's something we could do, but we've never really done it. And better than that would be to just get away from oil entirely and go to renewables, even if that included nuclear, and go to electric cars and make that happen. But that's not going to happen when Republicans have power. And it's just, we won't do it. We got the whole drill baby drill thing. And again, one of the things Krugman pointed out in that, I didn't say it on the slide, but it's just, drill baby drill doesn't insulate us from the global market. So when you say drill baby drill, yeah, let's do it. Well, it doesn't help you. And when you have this kind of a scenario, it doesn't prevent you from getting.
And it doesn't, just because you drill doesn't mean you're going to get anything. And one of the other guys we had that I was working with had worked on oil platforms and said they had prospected all up and down the East Coast. They'd done exploratory drilling, and there's not anything off the East Coast except maybe down by Florida, but you don't want that because of their beaches. They don't want their beaches fouled with oil.
Yeah, I mean, between the U.S., Canada, and Venezuela, you would think that, and the stuff we drill off Mexico, you would think that the U.S. could get enough to do it. But there's a lot, I'm not an oil expert, and I know there's different kinds of oil and mixes and all that stuff. But if we were to refine the stuff that we make in this part of the world, build the refineries to refine that, build cars that use that, we could get there. It just would be a major effort. And I would hope that if we, rather than do that, we would just strategically decide to go to renewables and get out of it.
Yes. And before the Iran war, there was a glut of oil supplies. There were tankers full of oil sitting off the coasts of everywhere. Yeah. The tanks were on shore when the refineries are all full.
Yeah.
So it's good. One of the other problems is, what I'm hearing is that there's a disruption in fertilizer, which comes out of the Middle East, and that's going to affect farming, and that's a big bad deal.
Yes, if you own a stock of a fertilizer company, you are a happy person.
But if you're a farmer, maybe not.
One of them is located right here. Is headquartered in Lincolnshire. I know about it because I was there on a contracting gig years ago, and I'll come up as CF Industries. They are a giant, one of the world's largest makers of fertilizer, has their headquarters right here, and they have a lot of a big plant down in Louisiana and in a couple other places, and they have some global ones as well. But their stock went from like 80 to 130 or something because of this event, and it's cyclical. Like it'll be in the dumps for many years, then all of a sudden there's a giant spike in fertilizer prices, and they make money hand over fist, and it goes back. So they're up, and their cycle is up now. And yeah, it's the Lincolnshire company doing well, or Deerfield company. They're just south of Lake Cook Road, off of Riverwoods.
And
Yeah.
food prices are going to go up.
Oh, right. Yeah. Oh,
Yeah.
yeah. I mean, this petroleum, it's in plastics. I mean, it's in food, it's in transportation. I mean, when prices of petroleum are going up, it affects lots of
The
stuff.
microplastic breakdown products are in your brain.
Yeah.
Yeah.
Are you saying my brain personally that something's wrong
All
with
of
Yeah,
our
all of
brains
us.
collectively.
All of
Probably
us.
all of us, yeah.
I'm just teasing.
Oh,
I'm
boy.
not.
Yeah,
Okay,
this stuff
Dave,
is not healthy, is it? This is not healthy. I mean, there's all kinds of horrible things about petroleum that you just don't hear about that much when there's a Republican administration, because they're drill baby drill people.
I have a
and they're
little patch in the backyard and I put vegetables in along about this time of year. If they look droopy, I water them. Otherwise, I ignore them and I've got all my own veggies and I don't have to go to the grocery store for 5 months out of the year.
Awesome. Look, that is the way to be. That is awesome.
I do it like a
and
hunter-gatherer. I stick it in the ground and come back when there's something to eat.
You're ready for
It's
the
not hard.
apocalypse. You're ready.
okay,
Rita,
another question for you, David.
yeah.
This has to do more with the housing kind of aspect, but Nora is saying, tongue in cheek, the U.S. is not dependent on foreign oil, and the U.S. chance an illegal bombing to free up Venezuelan oil for the U.S. And the president would prefer we use oil rather than energy resources, then be bombed by Iran. And now somehow U.S. citizens are paying more and more for gas. Did the current bomb and grab administration make a strategic mistake or two or three?
Yeah, I don't know. I would love to have lie detector tests with our leaders to understand what they did. You know, the guy that just resigned, one of his military advisors today, they had a letter from him in the New York Times, and he was really going off about how Israel sort of forced Trump to do this. And you know, whether it was anti-Semitic or whether it was fact-based, it seemed like, you know, that Trump was sort of that Israel was calling the shots and Trump was responding to that. I don't know if that's really true. I mean, I'd be curious to see if there's something else. You know, you heard some mid-level military guys talking about it from a religious perspective, like we had to attack Iran because of some prophecies and some other baloney. I mean, we've got some right-wing nut jobs. Yeah, Mark is making the official gesture over there. He's going like this. I mean, we've got them. They're out there. We got some crazy Christian folks. I mean, there's a bunch of them. So I am curious. I don't understand what we get out of this. If there was truly a nuclear threat, maybe they have some information they didn't share. If there was truly a nuclear threat, then some of this makes sense. But if there wasn't, and the guy that resigned today said there wasn't, then what is our interest in this? It doesn't seem like we have an interest. You know, I'm married to an Iranian woman, full disclosure, US citizen, but she's Iranian. And my brother-in-law is a very cynical guy. He's with us temporarily. And what he said is that Israel wants to keep the Middle East destabilized. They want Iran to be weak. They want, you know, Iraq, all these areas they want destabilized, because then Israel can do what it wants to do, which is expand. That is a very, and I'm also half Jewish, by the way. So this is a very, there's a lot of this noise out there, and it's very hard. This region is so complicated. It's very difficult to know what the real motivation is. But if Israel wants to expand and keep all of its neighbors very weak so it's safe, and the U.S. being friends with them, decided let's go along and weaken Iran some more, assuming that this actually weakens Iran in the long run, then you can kind of see some of the logic of giving Israel more breathing room to do its thing. And Iran, we've had a very long and miserable relationship with them. You know, we overturned their government in the 50s because they said that they were going to nationalize their oil. The British and the US overturned a democratically elected, fairly popular leader, put the Shah in. Shah wasn't a wonderful guy, even though he was our ally and helped us with from the oil perspective. So there's so much history here that I only know a little bit about. But if you get into it, you should, study the little bit of the U.S.-Iran history. But it seems like this is about Israel and the threat of a nuclear bombs at some point in the future. And Israel's territorial ambitions. And I hope I'm wrong, but that seems to be what we're
The
doing.
Iranians were grudgingly going along with the treaty that they signed with Obama. Okay. And Trump came along and canceled it. And if I were them, I would crank it up again. Now, how far they got, we have no evidence that they got very far with it. But I mean,
You would think we would
to
have learned with
me,
Iraq,
to
right?
me, this does not look like the elders of Zion have gone back to work. To me, this looks like two crooks who are facing jail time if they lose their jobs, Netanyahu and Trump. Netanyahu knows how to whisper to Trump.
Yes, he does.
Looks like Rita has had her hand raised for a little while, so
Yeah, sure.
Okay.
if you want to go off mute and ask your question.
All
Go
right,
ahead.
I'm off mute. So I spent about 12 years shuttling back and forth to the Western Persian Gulf countries and got involved with all of them. By the way, the Iranians that I encountered all called themselves Persians. How's that?
Yes, yes.
And I think very justifiably. Anyhow, the first shock that hit me, and this was, like I said, 12 years ago, touring around was the amount of investment that had already been done and in place on renewable energy. There were huge, and I mean huge, I can't explain huge to you here for the size of these things, solar farms, wind farms, you name it, throughout KSA, throughout UAE, throughout Qatar is such a tiny country, but as little as they are, they had it. Oman, I mean, I fell in love with Oman, but bottom line to it, again, it was a matter of these people really and truly do believe in renewable energy. They are not sinking everything into oil. In Dubai, Dubai is like the United States in some ways, except it's, authoritarian. The next Emirate next to or east of Dubai is Farja. And it's Farja that sits at the Straits of Hormuz. So of course I had to go over and take a look. Bunch of my redneck friends are screaming online that, and this is back again 8 years ago, the Iranians were blocking the entire Straits of Hormuz and so on. And I said, hang on, let me get my binoculars. I'll go take a look. And I came back and I said, nope, whole lot of PT boats around. Some are British, some are American, some are, different countries. And I said, oil tankers, and they're either floating high or floating low, depending on whether they're loaded. This is what Farja is actually making its money on. They offload and unload oil. Their tankers, right. Their tankers come, and it's a fascinating thing to watch. But anyhow, long and short of it, got to speaking to an Australian engineer who was working in Farja at this one offload unload platform. And he said, when I said, where are these going? You know, I'm seeing these tankers that have got country flags all over the place, but nothing in Canada, nothing in US, and believe it or not, very little going to South America. They were, as Dave said earlier, going to Asia. They were going to, as I believe, a lot of African registrations. So it's like, why would this be hitting us economically, even if there's a clog there? And believe me, we couldn't fit one of our aircraft carriers through the Straits of Hormuz. Impossible. That's somebody's fart dream. Sorry. So all told, this is a whole lot of theater, and it's theater that benefits only Israel, in my opinion. The little bit of time that I spent in Israel, everybody wanted to talk about how they had to bomb Iran out of existence. And I was like, why? You know? Well, because they're a highly religious country. So are you. Right? Okay, just sharing.
Thank you for that.
We have more questions in the chat.
And Miriam has her hand raised.
Yeah, a couple of things. Where a ship is flagged isn't where it's going.
That's true.
They're
Yeah.
right. So you don't
That's
know
true.
where they're going based on where they're flagged.
No, that's
But-
ship's registration, and that's
yeah,
all it is.
is not. The other thing
Right.
is, if anybody really wanted to be bad, they wouldn't be bombing oil fields and American air bases for the Gulf. They would be bombing the desalination plants.
Correct. I agree.
Okay.
And the water
this
treatment and the water treatment
yes,
plants. Mhm.
especially around Tehran. With the Israelis, it is not as monolithic as it appears. It's a lot more like here. You've got
Yes.
the extremists, the
Correct.
Ayatollahs have hijacked the government, and they're in control by a very small margin, which kind of
Also agreed.
explains how horrible Netanyahu has gotten. He's scared. And
He's nuts.
yes. Oh, yeah.
He's Trumpy nuts.
Right. But the thing is, if you take a look at the general populace, he does not have support for his policies. They're very angry because the people who are in charge, by virtue of a very narrow parliamentary majority, are the ones who are in the army getting killed for these guys who
Correct.
want them to go
Correct.
fulfill biblical prophecy. So
Correct.
it's not the whole country.
But
They're
propping up their propaganda with biblical prophecy.
The other thing is we don't hear about bad behavior until there's bad behavior, and that's what we hear about. We don't hear about the places where the Arabs and the Israelis get along fine. I know when I was there, the first time I was there was right after the 6-Day War, and the Palestinians were quite lovely because they looked at us as, holy shit, American dollars, this is going to be good for business. They were happy to see us, and right now within their own territories, there are Iranian paid terrorist fanatics, just like the ones who took over in Persia, who are, busy making sure that there's enough atrocities to keep everybody mad all the time. And if they stick their head up too far, and if they're too nice to the Israelis, they get their head chopped off.
Same observations that I had. Yeah, same observations
it's not
as I
quite
had.
as cut and dried as it looks.
No, it's not. It's the interesting thing though is that we've got this panic button on energy sources. And it is a strong enough panic button to send shockwaves through our market systems.
I have solar panels. The power company here in St. Louis pays me.
And
I'm not it wasn't expensive.
But
of course,
again,
I'm not in the lower 20%, but
well, so the whole thing about the impact to our economy, I think is really, it's theater. I can't name it any other way. It's theater.
I agree.
And with all of this theater going on, this is like being in a 5-ring circus, all going on at the same time. So while you've got all these distractions, including this one and Venezuela, and don't forget Cuba. Don't forget Cuba. Cuba was very dependent on oil out of Bolivia, Colombia, and Venezuela. We have all of this all going on at the same time. But if you take a look, as David has done and Carl have done over and over again for us, our economy is pretty solid. So what we have are these media bubbles that are causing these panics. When you cause panic, you've caused fear. Fear drives panic. And I have to say, why? Why are we responding to this? Where's critical thinking involved? A little bit of reading and a little bit of thinking, and you completely blow apart this 5-ring circus. Miriam, when I come down to Edwardsville, I'll come visit you.
Okay. It's a little bit of a drive over to St. Louis, but that's okay.
My daughter works in St. Charles, so I can have her drop me someplace convenient.
I tried to go there once, but I got lost. I pretty much stay downtown.
Edwardsville?
But don't eat the pizza.
Oh no. I've been to St. Louis more than enough to.
Well, I had never been here before I took a job here. It was a real shock.
Yeah.
Anyway, so my son had to go back to the promised land. He lives in your neck of the woods now.
Okay. Good. I'll visit.
Okay. And we won't eat pizza.
That was a great conversation. Very enlightening. Thank you.
You're welcome. That was fun.
Should we adjourn? It is 9 o'clock. It is a party night. I see Bill with his hand up. You want to finish it off for us, Bill?
Yeah, what a great engagement. This turned a little bit like our coffee and conversation, which we have every Monday through Friday at 9 a.m., where people just engage in a conversation of what's on their mind. So Miriam and Rita, I loved it back and forth. Please join us. It's the same Zoom link that you dropped in here tonight at 9 a.m. Central Time in the morning.
I gotta go to work, so have fun.
Oh, yes, some people do. Sorry about that. Anyway, this was great, engaging, lots of data. I love the Social Security. Thank you, David, for popping that in. Carl, thank you for all the updates on where we are today. I think you got it down pretty good. You've been doing it for, almost 13, 14 years now. So you guys, yeah, I love it whenever we put the promo out that says longest fiscal and economic discussion in the U.S. And I think it's right, done every month. So, and we've had some really bad news that we've had to report on, and some really good news and some average news. So that's been great. So a few things that are happening this week, though. tomorrow is Wednesday, and there's a couple of things that are going to happen tomorrow. We do have our how-to hands-on session at 2 p.m., and that's where we just look at at how to use technology to help leaders in the Indivisible, Move On, 5051 movement, and just simple things of how to use Zoom, how to use some of the details on Zoom, how to use Google Docs, etc. So we just have members that show how they're using it, AI, etc. So that'll be from 2 to 3. And then we're going to take tomorrow night off because
From 2 to 3
we're-
at this website?
yes,
Yeah.
at the same
There'll be a link.
link.
Okay.
Yes, the same link here, and then on Thursday, Ezra and Leah, who are the co-founders of Indivisible, this massive organization now that is just growing by leaps and bounds, they have a 2 o'clock coffee conversation. Again, it's a little bit of presentation for 15 minutes, and then it's taking questions, and that's from 2 to 3. And then we have our sorting soup, which kind of sounds like that might be kind of fun, but it is a group that takes on the most important issues that come up during the coffee and conversation and do deep dives into that. And that is at 5 to 6:30. And then we've just added Thursday night at 7 o'clock. If you're in Illinois, this is just for Illinoisans. We're going to, Inspire and myself are going to do a recap of the election results. That's Thursday night at 7 p.m. And it's not going to be anything tricky. We're going to be looking at the Trib and the different newspapers with the data that they are showing us where the results are at that moment. But there are some key races that we'll be talking about. Obviously, the Senate race, Durbin, obviously 07, 08, whatever number you have, we'll be looking at them, and we'll be engaging in a question and discussion. But we'll use the format starting from the very top to the congressional districts, to the state districts, and over 90 minutes, we'll probably get down into some of the local also. We were going to do it on Wednesday, but Ed is running a voting site in Elk Grove. He said to me, he says, I've been up since 5. I won't get to bed until 2. So I can't do it on Wednesday. So anyway, that's what we're going to be doing. And then most of you know, on Friday, we have our Unhappy Happy Hour at 5 p.m. Been going on for 5 years, just like our coffee and conversation. But we've added a noon social storming, noon to 1:30, along with Indivisible Evanston, Indivisible DuPage, and Indivisible Western. And we get 50, 60 people together. 2 or 3 of the folks create the social posts, and then the rest of us just amplify that across Facebook, across Instagram, across Blue Sky, Threads, and X. And we have a lot of fun doing that. So that's really cool. And then if you're brave enough, on Sunday, we do another sorting soup at 4. And that is a book review, Witches, Whores. I don't remember the rest of it, but it's about resistance. And they're into their 3rd chapter of that now. And then on Monday, we're going to have Kara from Indivisible Central, Illinois, that's going to be doing, I wish I would have said that. It'll be her 4th in a series, and I love it because I say that word a dozen times a day. I wish I would have said that. And then on that Monday evening, so that's going to be at 5. Kara's going to be at 5 Central. Same, all these things are on the same email except for the social storming. And then Monday evening at 7, and this is the last one I'll promote, Indivisible Illinois has a women's history panel with 5 of the sharpest young ladies that I have seen in a long time. They do it usually about an hour and 15 minutes. There's usually a Q&A at the end. But I love the way that these things go, because if you're like me and you wake up every morning after the news and you're kind of depressed, when you see the quality of these young gals, you're going to say, we are in great hands. And a couple of them even running for elections. So anyway, hey, I see Cecilia. Cecilia, what is the name of that book? Can you come off mute?
It's Witches, Whores, and Rebels, and it's a 9-part video series. But yeah, and she also has a Substack, The Fine Print.
And Cecilia is the host, and she is the leader of it, and she does an amazing job. Okay, everybody. So I just wanted to get all those plugs in for a very light week. And if you are saying light, yeah, we do 600 programs every year. NWSOFA. That's why we're no longer just the Northwest Burbs. We are now a national group with over 25,000 national and 10,000 local. So we strive to have all of these programs to really educate, as we said earlier. And David and Carl, you guys are the best. You rock. You do a wonderful job. I have no idea the number of hours you guys put into this, but what you give us is things that we can use every day to irritate our friends on the other side. Good night, everybody. Carl, David, any last thoughts?
Now, if people want to stick around, they can stick around and chat, We don't need to close.
Right, we're gonna turn the video off.
Okay, that's fine.